Hello guys, this is Randall with BitRage. This is the weekly Forex market breakdown, and we're going to be looking at a few pairs this week. There's actually some action starting to happen. We're starting to see what appears to be those moves that we've been anticipating and waiting for. This is why I've mentioned multiple times in the past, you have to be careful not to let the holiday season or other things in your life catch you off. You have to be always prepared for the moves because oftentimes they'll happen when you expect them not to. January of this year was a very big month for Eurodollar and a few other pairs. And it was a time when a lot of retail traders were expecting it to be slow due to the change in the year and the New Year's and all that. So it caught them off guard, and then they tried to get in on the impulses, and it just fed money into the banks. And this is why you have to be very careful. So good news for traders. It does appear like we are seeing a nice move on the dollar. Now we got to understand where we are at, and we're still in this larger pattern. So it is still possible that this comes down and it still moves back up. We got to keep that in mind. And the reason I say that is because you can't become biased to a specific scenario. Now, this is very impulsive. This is a very nice flag. We do appear to be seeing a break. If this breaks down, it is possible it goes all the way down to this area here, 93. It could double bottom here as well. We will pay attention to that as time progresses here. But I just want to keep you in mind of that. We are seeing a break of this trend line here. So a break of this pattern. We didn't get that complete fulfillment of the channel, but we did get the double top, which I've talked about multiple times in the breakdowns, and also we talk about it in the course. And I think it is a very clear and nice pattern. And I mentioned in the Slack group that I had actually taken this trade on Eurodollar, and I am still in the trade as well. And let's actually look at Eurodollar. So I think this is a very important lesson that you can learn here. So we have this double bottom area. We get a clear rejection. This is 1, 2, 3 touches. As I mentioned in the Slack group, this is it's close to perfect as you get. I mean, maybe there is even a better entry, but this is a really nice entry. Descending corrective, overall corrective pattern, 1, 2, 3, a reject, and that's why I entered on the retrace candle. Now, it is always possible this tags us out, but I would take this trade 10 times out of 10. This style of entry just works really, really well. Huge confluence. Now, this is the point I want you to pay attention to. So you're in this trade, nice impulse. Suddenly we see a rejection. Over the weekend, it just starts to drop out. And my entry was here. If your entry was up a little bit farther, maybe you entered when the candle was way up here, and maybe you were already at break even, you would have been taken out. And look at this. It's at 3.61. If you were a little bit more aggressive than I was and you took a 15 pip, it'd be a 5% trade. And here's my point. Moving your stop loss emotionally to protect yourself against a loss is going to kill your profits. You have to let the market tell you where it's going and follow the market. So as I mentioned in the Slack group, I wasn't going to move my stop loss until we broke this pattern. Once we broke that pattern, I did move my stop loss just below this low here. And there's a reason why I did that. But if you'd left it completely open, I think that would have been completely fine and wise. Because oftentimes, Eurodollar will move all the way back down and then take off. It didn't this time. It just moved down here to this area, and then it took off. So now that we are way up here, we definitely would want to keep this at break even. My stops are currently at break even at this time. I'm just waiting for a flag, and if we get a flag, I will do a scale in position. Okay, so just looking at Eurodollar on the daily, just a couple things I want you to keep in mind. This broadening wedge, I mentioned this previously, and you might think, well, it didn't actually fulfill. We didn't get a third touch on this pattern, but we actually did. As I've mentioned many, many times, we got 1, 2, and then we double bottomed, which can act as a third touch. and I mentioned this previously, and that's where we got the catalyst to move off, and we are moving higher. Again, it doesn't mean this is the big move that breaks this pattern, but it could be. So if you're in this trade, definitely protect your profits as you get opportunity to manage the trade. If we see a flag and then we break that flag, I would move my stops below that flag. But don't cut off circulation to that position, because it's possible that this is a big position that might net you 10-15%. And you don't want to be so aggressive that you cut it off. But you also don't want to be greedy, and let all those profits, 5%, drop down to nothing. So be smart. Again, I'm going to be releasing some videos on management very, very shortly. So this is the pattern that we are in. Impulse. This was the correction. It appears to move higher. We are seeing if this is the move that will break higher. And it totally could be, because 1, 2, 3, we got that fulfilled. This would be a very nice trade. So we're looking at upside for euro dollar. Obviously, we're looking at weakness for the DXY, the dollar. This would be more accurate, I think, and that would be a break. So that's a very steep style pattern, and I know that scares a lot of people, but it doesn't put me off whatsoever. Okay, so dollar Swiss franc. This is a pair that I don't trade a ton, but when it works out really well. And I didn't take this entry because I was taking euro dollar, and I didn't want to open just because I felt like euro dollar was a really, really good entry. So I was willing to let this one go. In hindsight, this does look really nice, but I don't think it looks as nice as euro dollar. But we do have one. I'm going to count that as 2 and 3 because that's the way dollar Swiss sometimes moves. But if we look at this, it's an ascending corrective move. We get that rejection. If you didn't take this, if you didn't see that as, and I'll show you something actually, this might help you a little bit. So this is more of a parallel channel. So 1, 2, 3, we move back up, we just break it, and then we retrace. I think that helps you see more clearly that this is a rejection to move lower. And that's the way I would have been looking at it. So we get that rejection. Maybe you didn't take the retrace, but then there's this nice flag, and this is a really nice flag. Okay, it might be a little steeper, but we get that arcing nature. We just break that high, and then we immediately retrace. Those are very good style entries. So that would have been a second position you could have taken on this, and I was actually looking at that and I missed it, but that was a trade that I would have taken. I was away from the computer at that time. But if you look at the power of these style of trades, I mean, that would be running 5%. This is why you want to be very patient, because last month was very corrective. We didn't get a lot of positions. But when they come, and they come in storm, and it just, there's a lot of opportunity. So be patient, because the opportunities do come. And this isn't even showing signs of weakness yet. So there's a lot of potential for this trade, and we could be looking at these areas for rejection, but we're going to, again, watch the DXY and see what the opportunity is there. All right, so dollar yen, again, it's following the DXY, and all these dollar pairs are going to. So if there's a dollar pair that hasn't moved yet, look for confluence and an entry, because if the DXY continues, all the dollar pairs will follow. So that's something to keep in mind. If we suddenly get rejection on the DXY and it just moves back up, then we may not see that on some of the dollar pairs. But this is another one that it might not have seemed the cleanest to you, and I can understand why you might have thought that if that is what you're looking at. But we do have this top, we break it, we retrace, and then we move back up, and again we break it, and then we immediately retrace. So that indicates weakness. Again, I don't think this was the best entry in the world. But again, if euro dollar or dollar Swiss hadn't worked out, I would have been looking at this. But I do prefer those two, the way they came out. But again, we want to be looking for flags now on these positions. So what we want to see is if we get a flag, and then we're going to enter on those flags. I actually think $CAD is interesting because it hasn't completely double topped. So it almost gives me the feeling that there's a possibility we might get a stall in the DXY and the $CAD might move back up one more time before it drops. It doesn't have to happen, but it's just something to keep in mind. We are seeing a rejection right now. Again, it's because the dollar is losing strength. So we're going to see that rejection. If the dollar continues, we probably will see this drop out very impulsively. But this entry right here, it's not a style that I would prefer. You do kind of have somewhat of a double top, but we also have these areas here, and we also have more of this flare, and the bottom isn't as clear, but it's got more of a descending nature to move a little higher. So it is possible we see this move down and then we see it move back up. And again, that could happen on the DXY. We might see the drop and suddenly a reversal. So we just got to keep in mind, we don't know where the market's going to go. You know, we can have a really good idea, but we don't know. So we just want to follow the market. So again, if we see this break, I will be looking for flags. Otherwise, I'm not going to be entering, even if on this retrace. If it fits your style, that's fine. That's cool. You know, do what you got to do. It is very corrective in nature, so I could understand why you might, but it doesn't fit my plan. If this corrects like this and we move back up and then we double top here and we get a rejection, that would be something I would be interested in looking at taking. So, okay, for Kiwi CAD, we're in that descending pattern. We did move lower and we didn't quite make that double bottom area. But again, like I mentioned before, the DXY, when it moves big, it's just going to pull all the dollar pairs with it. So the strength we're seeing right now is not because of the pattern as much as it is because the DXY is moving big. So that's why if the DXY is moving big and you see a weaker dollar pair like Kiwi dollar or Aussie dollar, and the pattern seems to be moving the opposite, I'd be careful to take that entry if the DXY is showing very, very impulsive movement. Now, if it's just showing some movement but it's not impulsive, then you can take a counter trade, but I'd be very careful. That being said, this is a style of pattern that can break to the upside. I think it's about a 40 to 50% chance it averages. So it doesn't necessarily mean the pattern is invalidated because it can break to the upside. But again, on this pair, we are looking for a flag. Right now we're seeing very nice strength. All I want to see is if we get a flag, and I'll be entering. So some of these pairs are definitely going to form flags, and just be patient for them. This week could be very nice. Okay, so the British pound dollar is actually very interesting because oftentimes British pound dollar will actually move first, and I've noticed this a lot. But British pound dollar actually has made some nice impulsive movement, anticipating the weakness in the dollar, and it didn't come. So now what we're seeing is just correction because the British pound dollar actually did already move. So if we continue again to see weakness in the dollar, I do think we're going to see a move on British pound dollar, but it has already seen some movement, so it's just correcting. So there's that, and then there's that. So those are what I'd be looking at for a pattern right now. This right here looks like it wants to break down, and maybe we'll get that break and then that move if the DXY continues. But right now there's no trade on British pound dollar, and I would not be taking any triple tops or anything like that because look how corrective it is. Okay, so there's no clear entries on this pattern in my book. I'd be waiting for this to show some more confluence. All right, so Aussie dollar, we're talking about the same thing as Kiwi dollar. We're seeing nice impulsive movement. We're just waiting to see if we get that flag. Yeah, this is one I didn't get a position on. I was looking at this here, but I didn't actually take it. It didn't fit my criteria, and I'm not going to break my trading plan, even though I anticipated this move. I'm still going to stick to my trading plan. But I'm looking for a flag. If a flag develops on this, then I would love to take it. Aussie dollar can actually make some really nice moves when it goes. All right, so I'm going to look at a few other pairs. That was the dollar pairs. We covered those. CAD yen, some interesting movement starting on the CAD yen, a very impulsive movement on the daily. We do have an overall corrective move here, but it is important to see this for what it is. An impulse that turned very corrective, 3-point touch, and a double top area, and we get the rejection. So this could be just a sloppy move to continue lower. Overall, this does have a feeling like it does want to move lower. So I'd be looking to this area and also these areas for rejection. On the hourly, we are seeing very impulsive movement, and we're seeing a rejection wick here. So what I'd like to see is this form a flag, and I'd be happy to enter CAD yen. Now, CAD yen is a pair that, again, I don't trade a real lot. It is very corrective, and you don't want to be trading these areas here. But since we did get a very nice move, I'd be interested in taking this if we form a flag. That right there would have been an entry, but this candle here was what I'd be entering on, and it was just too impulsive. So I'm not going to enter down here. That'd be dumb. But I would have entered here. So because we're seeing the weakness in the DXY, it's showing strength to the euro. It's going to follow through with other euro pairs. EURCAD is one of them. And again, that's why you're going to see EURCAD gain strength, and then you're going to see CAD yen lose strength, and it just the trickle effect. And that's why when the DXY moves, you'll see positions on all the other pairs follow through for months afterwards. It's just because they're going to follow. The DXY moves the world. The dollar moves the world. So the dollar and the euro are the only currencies in the world that actually matter. The rest of the currencies are valued based on the dollar, and they literally have no value outside the dollar. So if the U.S. economy were to ever completely fail, the whole world economy falls. It's just how it works. So we are seeing impulsive movement, again, like I mentioned, because we are seeing that dollar weakness. So again, just looking to see if we get a flag, and I would be happy to enter on this. One thing you do want to keep in mind, if we get large wicks that suddenly retrace, we don't want to take flags on those, okay? So if, let's say this moves up here, and then in the same hour, it just rejects, and that's a long wick, not going to take a flag entry. Even if it forms nicely, not going to take it, because almost always, 90% of the time, it's going to range in there. So we do not want to take that. Okay, so Euro British Pound, this is actually one that honestly I should have taken advantage of. But I'll show you why here. So this is a double bottom area. It doesn't quite touch, but Euro British Pound doesn't always. Just the way it moves, it's very corrective. But if you look at this, extremely corrective descending pattern, we know that it's going to break to the upside at some point. We know it's going to happen, and it does appear to be doing that right now. So again, we've had this really nonsense movement, and I've told you guys, do not trade within here, because you're going to get yourself caught and trapped and lose a lot of percentage. It's just not a good idea. So we are getting that impulse again. It's because the DXY is showing weakness. If you'd taken an entry on this, it would have been this double bottom here. So arcing nature, we do get the double bottom and rejection. Now, there's a couple of reasons why I didn't take this. This is overall impulsive. We didn't quite make that bottom area, and I've seen Euro British Pound where it just breaks and then it retraces and you just get caught in and out. So I didn't really like that style. Overall impulsive movement, this could just be a correction to move lower. I didn't like that style. And then when it moves up, it's just forming corrective movement. And again, we're breaking out simply because the DXY is losing strength. So anticipation of this move, because it is a descending corrective move, we did know it was going to break to the upside, but it broke early because of the DXY. And again, it's an entry that in hindsight, yeah, but it just really didn't fit enough criteria for me to take it. And I'm happy. I'm happy with that. I'm I'm not upset about it because, yeah, this would have been a nice trade, but would that work out 9 times out of 10? I don't think so. And so I'd rather wait for the good entries where there's an actual break or touch of that double bottom. Okay, so Euro Yen, similar style to some of the other ones. We do have that ascending corrective pattern. I don't really like this style as much because I like to see 3 clear touches. This is more of a double top, but I don't like that style as well. Now, I could understand if you were to take this, then that would be fine. You would need a 25 pip. That isn't a style that I'm taking anymore. Pretty much I'm sticking to 20 and 15 pip stop losses on pretty much all my entries now, and I have a reasoning behind that. There's nothing wrong with taking a 25 pip. It's just this is not an extremely good entry, so I'm not going to take that big of a stop loss on an entry that's not that great. Again, I can see this kind of just fooling around here, and if you look back here, we are close to this area and also this area and also that area. So those are 3 areas that we could still move up to, and it would take you out for that 25 pip stop loss. So if you're in this trade, I understand why, and I do hope it works out for you. But we didn't get that clear third touch, and on Euro Yen, that is something you really do want. But it could work out, and I do hope it does for you. But Euro is gaining strength right now, so it is more likely we do see this move up. Alright, so Euro Kiwi, again, interesting pair because overall we do have that ascending corrective. But as we get this impulse, you'll notice it turns very corrective, very wicky, and we just slowly arc down. We do double bottom with arcing nature, and we do appear to be getting a rejection on the daily, so that is something we do want to pay attention to. Now, it is forming what could turn out to be a flag. I will tell you that I will consider this depending on how it forms, but because we are at a double bottom area, it does weaken the possibility. So it's not the highest probability trade, even though this is very impulsive, but it still could definitely work out, even if it is a more short-term trade and maybe we get a rejection later. But again, it is a double bottom area, and we are seeing strength in the euro dollar. So I'd be very careful with this one, even though it does appear to be forming a nice flag, or a decent flag, I guess. Now, I want to show you Aussie Kiwi because I think there's some things we all could learn about this pair, and it's a pair I haven't traded a ton, and I need to do more backtesting on. I really do want to do that. The reason being, it's a very corrective pair, and you got to be very careful with it. Aussie and Kiwi, their actual economies are very much tied. The Kiwi is actually very dependent on the Aussie, and so any big changes in the economy or structure of Australia does hugely affect New Zealand because they're very dependent. So oftentimes you'll see very corrective movement because they're pretty much running neck to neck. But when it does move, it can move very nicely. And the move down has been very nice. Now, if you look at it on the hourly, it has been overall quite corrective, but this is how Aussie Kiwi works. So if you look closely, there are flags and impulses all through this. So Aussie Kiwi moves very, very differently than other pairs. But I do think if you were to backtest this pair and focus on how it moves, I think you could make a really nice percentage on it. Because you just think about it. Let's say you took an entry here, okay? I'm not going to explain why I placed it there. I'll do that in a future video. But let's say you took an entry there. This would be running at 8% right now. Now, you might not have stayed in all the way. This wick would probably have taken you out. So let's just put it there. It'd be like 2.56%. But like I said, there's impulse, correction, impulse, correction, impulse. That's a little sloppier correction. Impulse, correction, impulse, correction, impulse, bigger correction, impulse correction, and then the bigger move. So a lot of correction, you just gotta identify them. So if you want some homework, you want to maybe master a pair. If you could master Aussie Kiwi, I think you would bank really well during the impulsive movements. Okay, like this is, to me, is an impulsive movement, even though it's corrected. But that's Aussie Kiwi. If you're not doing really well in trading, I mean, if you're not profitable yet, I would probably put this one on the back burner and focus on some of the other pairs which are better. Alright guys, so that'll probably about do it. Just keep in mind, we're seeing a lot of impulsive movement. Don't get caught up in it and try to enter on the impulses or enter on mediocre trades. Be patient and wait for them. We will have corrections. We will have retraces. We will have more opportunities. This is not the end. It's just the beginning. So things are looking good. I think it's going to be a nice week. I think it's going to be a really nice month ahead, and I think January might be a very powerful month as well. So the next 2 months may very much make up for the last 2 months. Just again, focus, and really put in time back testing. I think it's going to be very powerful. So I'm going to continue to manage this trade. I'm going to be looking for a scale in. I hope we get one, and I'll be very keen to see if some of the other dollar pairs line up for, and also the euro pairs line up for a nice entry. If this is the first time you've been watching BitRage, I encourage you to hit the subscribe button. Also check out the course in the description below. We do have a Slack group. We will be releasing new content, and we would love to have you as part of the community. This community is very much dedicated to mastering trading and excelling in every aspect of trading. So we'd love to have you. Check that out. If you have any questions or comments, drop them in the comments below. Let me know what you thought of the video. If you have any ideas for future videos, any questions I can help you out with, I would love to consider that as well. Thanks so much for watching, guys, and have a great one.